What's going on, everyone? Chris Jarzik, your Southwest Florida Realtor with MVP Realty. I want to thank you for stopping by and checking out today's video. It's a great one. I just sat down and interviewed my insurance agent, Scott Ehrenfeld, owner of Way Better Insurance. He provided me with a lot of great insight on what's going on with the Florida insurance market. So if you do have questions about insurance, this is definitely the video you want to check out. I'm going to roll it for you, and I'll check back in with you when the video is over. Welcome back, everyone. Chris Jarzik, MVP Realty. I am joined by Scott Ehrenfeld, the owner of Way Better Insurance here in Fort Myers. I have gone through and scoured all of my social media and gone through every single platform that I am a part of, and also collected questions and other concerns from people at my open houses. Basically, everyone I run into these days loves to talk about insurance. So I thought, why not bring in an expert? The owner of Way Better Insurance is going to go through with us today and answer a ton of questions. And the reason we're sitting down today for this interview, and I appreciate it, Scott, is the fact that, and we were talking off camera, which you guys probably won't see in the B-reel footage, there are so many experts in insurance who do not sell insurance and who live in other states.
Yeah.
So we are going to cut through some of this false information today. He's going to give us the real answers. I mean, if it's a bad answer, he's still going to tell it. He's going to be very honest and upfront with you guys, and hopefully shed some light onto what the insurance crisis here is in Florida. What I'll also do is I'm going to put all of Scott's information and company information down in that description box below. If you guys need insurance, you have any questions, anything that we missed in the 12 questions or so that we have here, give him a call. He's great. He's my insurer. I'm a little biased, but he saved me a lot of money over the years, so highly recommend. But let's get started. Are you ready?
Yeah, absolutely.
Okay, we're going to just go down the line here. So first question, pretty simple one. Why are insurance companies leaving Florida, in your opinion?
Yeah, so a lot of it has to do with the assignment of benefits that they were doing last few years. DeSantis changed some of that, the legislation on that, so that basically there's roofers knocking on your door, just canvassing neighborhoods, knocking on people's doors saying, hey, you got some damage on your roof, sign this paper and I'll get you a new roof through your insurance company. After 48 hours of them signing that paper, the roofer owned the rights to that claim. And it's not just roofers, it was water dry out companies, contractors. So an assignment of benefits was signed. That contractor owned the rights to that claim after a couple of days. So a month goes by, they put in the claim, the insurance company comes out and says, well, this is just an older roof. We're not going to cover this. It's a wear and tear issue. It's life expectancy. It's not damaged by a covered peril. And so the roofers say, okay, they would take that denial letter and give it to an attorney who would just sue the insurance company. And they would sue that insurance company, and no matter who won that lawsuit, the insurance companies paid all the legal fees for that roofer. So the roofer, the contractor, had no skin in the game. So they were just canvassing and lawsuit, lawsuit, lawsuit. And it's kind of like throwing it up against the wall and see if it stuck, right? And so if they did get it approved, then they got a roof out of the deal. If it didn't get approved, they didn't have any legal fees, and they would just move on to the next one. So, and then on top of that, the judge could hit them with a multiplier, the insurance company with a multiplier. So if it was a tough case for the two attorneys, they say, okay, well, we're going to give the roofer's attorney a multiplier of 4 because they won this case. And so 30,000 legal fees went into $120,000 in legal fees. So it was a multiplier of 1 through 5. And the conditions to get that multiplier was not difficult, right? And so a simple $20,000 roof that the insurance company didn't feel like they should have paid could turn into a $150,000, $200,000 claim easily. So there was a number of companies that went bankrupt before the hurricane hit. In the past 2 years, I think there was 6 or 7 of them that went bankrupt, left the state, pulled out of the state, and just left. So then that was the first thing that was happening, is those fraudulent roof claims. And then Ian came in and wiped out, cost hundreds of millions of dollars. I think it'll be over billions of dollars when everything's said and done. And all of that has to do with the cost of reinsurance. So all these companies buy insurance for themselves. So American Integrity or Edison or Florida Penn, any of these companies, they insure an X amount a dollar of homes, and they don't have the money to pay out all of those claims. So they go to big offshore companies like Bermuda Insurance, Lloyd's of London, and buy insurance for them. And so they say, okay, we only want to spend $75 million of our money if a hurricane hits. So hurricane hits, there's hundreds of millions of dollars of claims. They spend their $75 million deductible is what it is.
Mm-hmm.
Then the reinsurance companies come in. Well, the cost of that reinsurance has quadrupled over the past few years, partly because of the roofing claims and the hurricanes that we've had. So Irma in 2017, I think it was Michael up in the Panhandle a couple of years ago,
Yep.
and then Ian recently. So the cost of that reinsurance has made it not economical for these companies. They just couldn't afford it. And so some of them, like UPC, couldn't buy enough reinsurance come last hurricane season. And so they went into hurricane season not having enough reinsurance. Hurricane hit. They started paying claims, ran out of money, and so they went bankrupt. Then the state comes over and takes them in. So between the litigation and the cost of reinsurance, it just doesn't make sense for some insurance companies to do business here in Florida. So that's why they
Yeah, it
were
costs a lot of
leaving.
money.
Yeah, it was just too expensive for them. And so that's why a lot of the companies, the bigger companies, the Travelers, Allstate, State Farm, and State Farm still writes some, and they did, but they're not as big as they once were, but, going back into the 90s. And so Allstate stopped for years writing home insurance. So they just made a decision it wasn't economical for them to do it.
Now, a quick follow-up question for the companies that have pulled out. Are you seeing anyone new come in to sort of take up, residence here, so to speak, and
Absolutely.
and
Yeah.
insure?
Yeah. So there's been a couple of new companies that have come in the last year or so. I think, and there's supposed to be two big companies coming in next year in the spring, summer of next year. So they haven't given us the information on that, but there's talk in the industry about that. And it's a lot has to do with the tort reform that DeSantis signed that went into effect on July 1st, that he signed back in December of last year. So those one-way legal attorney fees from the insurance company, they're no longer. So now homeowner sues their insurance company and they lose that lawsuit, they're paying their legal fees instead of the insurance company paying the legal fees.
Gotcha.
So that tort reform really helped. The attorneys don't like it, obviously, but it's going to help the homeowner. And
Well,
down
of
the
course,
road,
the attorneys don't like that.
right. But it's going to help the premiums and if we didn't have the storm on September 28th last year, we started seeing some effects of that tort reform already. But on June 30th of this year, the day before that tort reform went into effect, I think there was like 200 and something 200,000 plus lawsuits filed on that day, and it crashed the court system. There's their court system down, and so they got to weed through all of those lawsuits before we start really feeling the effects. Between that and the storm, it's gonna take a little bit before we feel those effects.
So you mentioned all the insurance fraud claims with the roofing.
Yeah.
So explain to the viewers here what happens moving forward now with the roof. Was it 10 years? Was it 15 years? How are we getting around that roof issue now?
Right. So historically, the roofs the insurance companies would always take a metal or tile roof up to 40 years old, and then a shingle roof, an architectural shingle roof, up to 20 years old, or a three tab up to 15 years old. Then when all these these fraudulent roof claims started coming in, the assignment benefits deal, they backed those way down. So now insurance companies are saying, well, we only want to take tile roofs to 20 years old, and shingle roofs some of them were only taking shingle roofs to 10 years old. So some of the legislation DeSantis passed is that no matter the type of roof, 15 years old is the age of the roof that insurance companies pretty much have to take. Okay. But some companies are getting around that rule and saying, okay, we're only going to insure homes 5 years and newer, right? To get around that situation. So the legislation on the tort reform and the assignment of benefits is going to help that, but it's going to take some time for that to get better. But right now, most companies are taking shingle roofs 15 years or newer, and some of them will take them up to 20 years old. But Citizens is really the only admitted carrier that's going to take a shingle roof over 20 years old. And the key there is that it has to have 5 years of remaining life left on it. So if it's 22, 23 years old and has 6, 7 years of remaining life left on it, Citizens will take it in that situation. But the majority of companies are wanting roofs, no matter what type of roof, under 20 years old at this stage.
Gotcha.
Still a handful of companies that'll take a tile roof and a metal roof up to 40 years old. It's just it's fewer companies, which is, the less companies competing for your business is going to drive up the rate. It's supply and demand, basically. So.
Now, we're going to piggyback off of the roof conversation. You and I spoke off camera about 4-point inspections, and is there anything a homeowner can do to keep up on their property, maintain it so that insurance isn't as high if everything was just old and dated? So
Yeah,
can you touch on that for us?
absolutely. So most companies, when the home gets over 30 years old, or in Citizens' case, 20 years old or older, they're going to want a 4-point inspection. So that's the roof, the plumbing, the electrical, and the AC unit. Those are the 4 main points that insurance companies worried about that can cause damage to people's homes and cause them to pay out claims, right? So the roof they're looking at, they want some life expectancy on that roof and a certain age on the roof. The plumbing, they like to see an update within the past 20 years. So water heaters got to be under 20 years old. On older homes that are over 30, 40 years old, a re-pipe of that house would be
So
preferable to them.
no copper, the CPVC.
That's right. Yeah,
Gotcha.
absolutely. There's a couple of pipes there's a piping called polybutylene pipes that
The gray pipe,
the gray
yeah.
pipe, yeah. So that was causing a headache for insurance companies. They've known to fail here with our water quality. And so they don't like those types of pipes in the house. The AC unit, they went under 20 years old, and the electrical system. So some type of update to electrical system. So, when you put in a new air conditioner, that's some of these companies look at that as an update to the electrical system. But if not, newer breakers, you don't have to necessarily go and change out the whole panel, but newer breakers just to maintain that electrical system, the AC system, the water heater, the plumbing, and the roof is what, when you get those, if everything's been updated, it's a lot easier to get a policy and keep that policy in effect than if it's not. Some companies are looking at a 4-point that we did 3 years ago, and they had a 17-year-old water heater, and then they'll revisit it at renewal this year, say, okay, well, now that water heater is 20 years old, we're going to non-renew you until you prove that you've replaced it. And so then you send in pictures and a paid receipt showing it's replaced. Then they'll reinstate that and issue a renewal.
Gotcha. Now, you touched on Citizens. Explain for the viewers what exactly Citizens is, because we're going to also touch on the depopulation Citizens has recently sent out. Hundreds of thousands, and to some social media people, millions, and dropped people, and is moving. Kind of cut through that that social media jazz there, and tell us what's Citizens currently doing with policies. Just give us a whole overview on that, if you could.
Absolutely. So Citizens is the state's insurance company. They have subsidized rates. They're not collecting the real premium that they should be collecting. They're underfunded. So they were designed for insurance of last resort. So for non-conforming homes directly on the beach that these private carriers didn't want to take, they were really designed for insurance of last resort. They will take stuff that they won't take a home that's in disrepair, but they will take electrical panels, homes that private markets won't take, like a Zinsco or a Challenger or a Federal Pacific. Those. If you had a issue with the home that wasn't conforming to the private market, then Citizens would take you as long as it was in good condition. A shingle roof that was 25 years old, as long as it's in good condition, Citizens will take you, whereas these other companies won't take you. So Citizens was designed for insurance of last resort. With the current market conditions, people's policies going up so drastically in cost, they are becoming the largest insurance company in Florida based on price. And so what's happened is, you get your renewal for $3,000, $4,000, and Citizens is 1,100. A lot of people are moving there. Citizens
Yeah.
has a rule that if their rate is within 20% of your renewal rate, they will not insure you. So when I do a quote, you shop in your policy, I do a quote, it's within $50 of each other, and you say, Scott, I really want to move over, I need to save the $50. Can't do it. Citizens won't take you. I have to prove to them that I have to submit your renewal. And if it's within 20% of cost, Citizen says, no, you need to stay with the private market. But when it's 300% of the cost, then Citizen says, okay, we'll take you. So what happens is these private market companies are incentivized by Citizens to go into Citizens' book of business several times throughout the year and look at their book of business and pick homes that they feel comfortable that they would depopulate or take out as Citizens. And so we've gotten probably 600-700 in the past 60 days or so that taken out of Citizens. Yeah.
Which is why we're sitting here.
Yeah. So what happens is they send the homeowner a letter and say, okay, at renewal, next year, your policy with Slide or Homeowner's Choice or Florida Peninsula is going to be $3,000, and our renewal is going to be $1,800. Well, if it's over that 20% rule, then the homeowner has a choice. Do you want to stick with Citizens or go to the private market? The benefit of the private market is Citizens doesn't offer as broad a coverage as the private market. So Citizens doesn't cover pool cages, limits personal liability to $100,000, um, uh, doesn't cover animal liability, stuff like that, right?
Gotcha.
So they don't offer as broad a coverage as the private market. So, if you couldn't get insurance anywhere and Citizens was the only option, and then Slide comes in and says, okay, well, we're going to offer it for you, then you can get your pool cage covered with Slide, right? So like there's some people that say, okay, well, yeah, I really want to cover my pool cage. Let's move over to the private market, even though it's a little bit more money. Let's go to that because I can get my pool cage coverage if I have an
Yeah, with the
umbrella.
cost of pool cages today, if you're paying an extra couple $100 for Slide or
Right.
400 or 500 in case that happens, it's worth it.
Absolutely, yeah. I mean, pool cage average cost of a pool cage probably $20,000 to $30,000 these days. I mean, they're expensive. So it's the private market just offers broader coverage. Some people, with everything else in the world going up drastically, the cost of groceries, everything, say, well, I really need to save this money. I don't have a pool cage. I'm going to stick with Citizens.
Yeah, I'll roll the dice, go with Citizens.
Yeah, absolutely. So there's a few downsides of going with Citizens is they don't offer as broad a coverage. They limit liability to $100,000. So if you have an umbrella policy, you have to buy an excess liability policy for your umbrella to kick in. So that's a downside. And then they can hit you with a 45% assessment, mid-policy period. So you pay your policy up in full. You paid $2,000 2 months ago, paid your policy in full. We have a couple bad storms this hurricane season, and Citizens is hemorrhaging money. They can send you an assessment up to 45% of your premium and say, pay this or we're going to cancel your policy.
Gotcha.
Right. And so there's some downsides going with Citizens. They've never enacted that portion of it. So they never hit anybody with that special assessment, but it is an option.
But it is there.
Yeah, it's there that you
So
could do it.
just be aware of that, guys.
Yeah.
There is that 45%, like Scott said.
Yeah. So and it's up to 45%. So it could be 10%, 20%, whatever, but it's up to 45%, which on some of these Citizens policies are $4,000, $5,000, $6,000. And they might have switched to Citizens to save $1,000, right? At that point you pay your assessment, then you're back to where you are in the private market. So we can keep you out of Citizens. It's always the best option for you, especially with some of the changes they got and with the flood situation coming up. So.
I'm glad you touched on flood because that was going to be one of my next questions. I recently saw on the internet, go figure, not sure if it's true or not, but the requirement for flood insurance. There was a rumor, or I don't know if it's truth, and we're about to find out. Will Citizens be requiring people in non-flood zones to carry a flood policy?
Yeah, absolutely. So right now, I think it started April 1st of this year, is that any new business or renewal policies that are in a standard flood zone, which is this typical AE flood zone, they are required to carry a flood policy, either the maximum NFIP policy limits, which are $250,000 on the building, $100,000 on contents, or the policy limits on your Citizens policy. For example, you lived in a $400,000 home, you had 400,000 on Citizens for the building, 100,000 in contents. They would require you to carry the maximum policy limits on the NFIP policy, which is $250,000 on the home, 100,000 contents. Likewise, if you lived in a $200,000 home, they would require you to carry 200,000 on the flood and at least 50,000 on the contents. So if people that don't have mortgages, that just are in a flood zone and did not want to buy flood insurance, they weren't worried about it, and it never flooded there, they said, well, I'm not worried about flood insurance. To go to Citizens, they would either be required to buy a flood policy at the policy limits that Citizens has, or they couldn't go to Citizens. That's this year. Next year, it's all homes over 600,000, whether you're in a flood zone or not. Okay. The following year, it's homes over 500,000. It's 2024, 25. By 2027, every policy that's with Citizens, whether you're in a flood zone or not, you could be in Orlando up on a nice hill where it's never going to flood.
Yeah, basically middle of the state.
Exactly. Yep. You're going to be required to buy a flood policy for Citizens.
Gotcha.
So they did that to get Citizens back to be insurance of last resort. So Citizens is slowly becoming the largest insurance company in Florida.
They want to tamper that down.
Absolutely.
Then, is what you're saying.
Absolutely, because they're not funded to be the largest insurance company in Florida.
It's the last resort.
Yeah, absolutely.
So, so they're starting at 6 and above, 600,000 and above. Next year, 5, and then in 3 years, just to try to make sure people aren't married to Citizens, they are going to require that.
Yeah.
What does a flood policy generally go? I know it's tough to call because it always changes, but just a ballpark, and don't hold them to this because you never know. You got to call and find out, okay?
Yeah, so the flood insurance back 2.5 years ago or so, I could tell you if you're in an X flood zone, which is a preferred risk flood zone, it's for people in Orlando or even in Lee County that are not near the water, that have very little chance of flooding. So if you have a mortgage, your mortgage company would not require you to buy flood insurance. Everybody's policy, there was set limits. So if you wanted $250,000, I think it was $517 for the year. And then it stair-stepped down. And there was a chart, and this is how much it would cost. I could just tell you. They started that risk rating 2.0, I think it was about 2 years ago. And now it fluctuates. So I'm in the next flood zone for my house. My policy would have been $517. I quote it today, it's $2,700. I quoted a lady on Merritt Island, which you would think anything with the word island in it would be in a flood zone. But she was not. She's in the next flood zone. And I quoted the other day, it was $8,000, which 4 years ago would have been $517 for that home. So it's all based on elevations and topography maps and just the way they do it now. So there's no rhyme to reason or the flood insurance now. Whereas the people in Orlando that were 517, they only might be 310 now. So the rates could be less for the people that are in very low risk of flooding. But if you're in a low lying area, it fluctuates. So it's different. I mean, I can't really guesstimate. Cape Coral area, you're probably looking anywhere from $2,500 to $6,000-7,000. It just depends on how low your area lies.
Gotcha. So your elevations. So a lot of key factors are going to play into that. Yep. As I said before, if you have flood insurance questions in general, I'll put all of Scott's information below.
Here's one thing I do want to add though, is if you're buying a home and somebody has an older flood policy, so like someone has lived in this home since 2005 and they've had a flood policy all since then, we can assume that policy and you're paying their rates. You're kind of grandfathered into their rates.
Wow, that's good.
Yeah, so it's a huge difference. So did one the other day. If I quote it, as a new purchase, they didn't let me know they had a flood policy. The buyer didn't know if they did. So I quoted it. It was $3,800. I asked them. I said, well, if the seller has a policy, I just need to get a copy of it, get that policy number, the company, and the name of the company, plug that in the system. It pulls into the rate that they're paying now, so you can assume that exact policy,
which was substantially less than $3,800,
$1,200.
So see there, guys, you're looking at, if you if you're buying a house, like he said, and there is a flood policy that's been there for a long, long time, you can save a lot of money. So that from $3,800 down to
It was $1,200. Yeah,
$1,200.
it was a big
So that's
difference,
a very big savings.
and some of them can even be bigger than that. I mean, it's the new rates are drastically different than the old ones. So I think the new flood rating went in 2 years ago. So if it's a flood policy that's been enforced at least over 2 years, then that's an important thing. So just get the seller's flood policy, and then we can assume those rates, and it's a big difference.
Awesome.
Yeah.
Awesome. Another question that I receive quite often from people out of state that are looking to move here and looking to buy, and then occasionally people that we run into in open houses. In your professional opinion, and again, it's tough to call because you never know what the industry is going to do. Do you feel that rates are going to continue to rise the next couple of years? Like, what's sort of the forecast? Because I get people ask me this all the time with real estate. Like, is there going to be a market crash? What's going to happen? And I have to get my crystal ball out
Right.
and say, I can't tell you that.
Yeah.
I don't know. So this is going to be a tough question to answer. With your industry, do you feel things are going to level off? Do you think things are going to keep continuing to going up? I mean, as we talked about a little bit earlier, you go to the grocery store, the gas station, everything's expensive. Insurance is expensive or getting expensive now. Where do you see the market going the next, year, couple of years? Just give me your
Sure.
take on that.
Yeah. So I think it's going to get better. I mean, it in this industry, historically, it's cyclical, right? Like, so rates been going up and down for years. So we have no 405. We had a number of hurricanes during that time,
Mm-hmm.
and shortly thereafter, rates went up through the roof. They were expensive. Companies were shutting down, not writing insurance. A lot of citizens policies, and then we went several years without any hurricanes, and rates got real good, real cheap. A lot of companies came into play. Some of the companies that are no longer with us selling policies at too low of premiums. And so it will get better. There's a lot of factors that come into play, though. So, like, we were talking about the reinsurance companies that insure these Florida insurance companies, and insurance companies all across the world. They insure insurance companies all across the world. Um, it's not just Florida that happens to, right? So when you have wildfires in California, you have earthquakes in where was that earthquake recently? Morocco,
Morocco,
was it? Yeah,
yeah.
Morocco. You have tsunamis over in Asia over there. Those insurance companies pay out claims for those, right? The reinsurance companies. So they insure insurance companies in China and all over the world. So these natural disasters that happen all over the world, these reinsurance companies pay out claims for. And so the reinsurance costs go up based on, how much money they pay out on. And so I feel like the natural disasters are happening way more frequently than in the past, or at least they're in the news way more frequently. So the cost of reinsurance, that we got to get a grip on that. The tort reform that DeSantis signed is going to help. It's just going to take a little bit of time for that to kick into play. And so that will help. Inflation, when a homeowner's roof gets ripped off in a hurricane, a shingle roof was $12,000 of just a few years ago, $13,000. Now they're $25,000,
Yeah, 25,
So
30. Yep.
yeah, so the cost of materials, the cost of labor is going up. So inflation's not helping these home insurance companies either. So, there's a lot of moving factors, but historically, rates get high, companies tighten up what they want to take, and then gets a little bit better. They put some profit in their pocket. They loosen up a little bit. Rates come back down. So, are they going to stay up forever? No, they won't. When that changes, that's yet to be seen. So, right now, there's no indication that companies are taking rate decreases. I just saw one of the companies come in and they're taking a 9% increase, right? So, and all the increases are approved by the state of Florida. They have to take their financials. These insurance companies have to take their financials and show it to the state of Florida and say, okay, this is why we need to take a 12% increase. In the state of Florida, the insurance commissioner can look at them and say, okay, and they dictate the rate. The insurance commissioner say, well, you don't need a 12%, you need a 9%, so we're giving you a 9%. Or likewise, they could ask for 12, and the insurance commissioner say, well, you really need a 16% to stay in business. So we're going to give you a 16%. So it is dictated, it's not just a CEO saying, hey, let's put some more money in our pockets, let's raise the rates up.
Yeah,
All
let's
of it,
jack it up
yeah,
because we
all
want
of
to
it
make
has to
more.
be approved by
So
the insurance
there
commissioner.
is a process,
Absolutely.
because I think a lot with today, and you just touched on it. Um, I did, and it was almost 20 years ago now when those storms came through back in 04, 05. I, had to try to figure out what my policies were, but you had said they had gone up. I didn't even remember that.
Yeah.
And it wasn't really social media driven back then like it is now,
Right.
because as soon as Ian hits, I mean, you have everybody goes nuts, and rates are going to go up, this and that, and you are correct. It is that market. So when it went up in 04, 05, then it started to come down in what, like 7, 8, and 9, and
Yeah.
once everybody got, so eventually we will see, barring any major storms, a sort of decrease. And there's one thing you did touch on with the reinsurers. Now, a lot of people, again, the experts that never sold insurance and they don't live in Florida, as I'm sitting with the expert, um, you'd think that we are the only state that has an insurance problem.
Yeah.
I know you know a lot of industry people, as we do, across the country. Is this just a Florida problem, or are we just seeing a lot of it in the news media? You turn on the TV, it's Florida this, Florida that. I mean, are there other states having any other problems with people you've spoken to in your industry?
Yeah, absolutely. So, like out in California, a lot of the big companies, I think Allstate, State Farm for sure, is not insuring homes because of the wildfires, right? So, like, it's wildfires in California. It's my sister sells insurance in Dallas, Texas, and it's hail in Texas, and a lot of insurance have shut down or stopped writing policies in certain parts of Texas because of that. Louisiana, Alabama, it's hurricanes. Hurricanes go up there and hit there too. So there's companies that have pulled out of that area too. So up north, I don't have a handle on up north, but I'm sure there's issues with frozen pipes and snow and sleet and hail and up there too. So it's not just a Florida thing. Florida does have its unique problems. The policies for State Farm and Allstate in Florida are not the same policies around the rest of the country. They're unique to Florida because of the threat of hurricanes. And so while Florida has a lot of attention on it, for one reason or another, we do have high rates right now, and we've been hit with some hurricanes in the last few years, some pretty devastating hurricanes that these companies have lost hundreds of millions of dollars. It's not a Florida unique thing. The home insurance industry as a whole across the country, whether it's tornadoes in the middle part of the state or, like I said, California fires, there's pressure on all of them for sure.
Okay, so it's not just us. We for some reason make front and center news. So you heard it here first. That there's insurance nationwide is having its ups and downs. So it is not just the state of Florida. One question I have: what separates you and Way Better Insurance than, say, an Allstate or a State Farms? I have clients say this all the time to me. Like, I'll just bundle my home and auto, and I'll go with my large company.
Yeah.
What's the negatives, positives? Like, give the viewers here why call an agent like yourself versus just calling up their giant conglomerate that they've got everything bundled with.
Yeah. So basically, State Farm and Allstate are what called captive agents. I'm an independent agent. So State Farm agent cannot go out and get new appointments with any insurance company they want. They're basically told, here's who you're going to write with. And in State Farm's case, it's like State Farm, Citizens, and maybe one or two other companies. Allstate has a handful of companies that Allstate's picked that they can write with. We write with over 20 different companies, so on home insurance and 6 different auto carriers. So the benefit of dealing with an independent agent is that we can shop. We write with just about most of the admitted carriers in Florida these days that are actively writing insurance. So when your home insurance comes up for renewal, you give me a call, I'll stop what I'm doing, I'll shop it through all 20 plus companies, and Edison might have a better option for you next year, or Florida Peninsula next year, or American Integrity, or Universal. There's many options, and so you're not tied to it's a supply and demand deal, right? When you only have a couple of companies competing for your business, the rates, you're not going to find the best rate. So when you expand that out and look at all these companies, it's going to benefit you better. So I hear a lot of people say, well, I can't get this house, or I can't buy this house because my insurance agent, my Allstate agent said there's my best options $6,000 a year. Well, they call me, and then I can find something at 2,500 because I write with companies that Allstate agent doesn't. So if you call one agent, don't get persuaded that's going to change your insurance budget because you give another agent, an independent agent like me that writes with multiple carriers, you might find completely different rates than you do with a captive agent. So it makes sense to call an independent agent like me and let us do the shopping for you, and make sure that we have a number of carriers that are competing for your business.
So it's similar to what I tell clients when it comes to mortgages. Don't go directly to your bank because Wells is going to write you a Wells policy. You
Yeah.
always have to shop around.
Yep.
So that's good information. We're going to close this one out. I'm going to go ahead and put all of Scott's information down in that description box below. Like we said, if you have any questions regarding this interview, flood insurance, homeowners insurance, and even car insurance.
Absolutely. Yes, sir.
Yeah, car insurance. Do give Scott a call. I'll put all of his information down in the description box below. I am Chris Jarzik with MVP Realty. Thank you for checking out the video, and we'll see you on the next one. Welcome back, everyone. I hope you enjoyed today's video. If you have any questions on the Florida insurance market, I'm going to go ahead and put all of Scott's information in the description box down below. Feel free to give him a call and he'll answer any questions you may have. And as usual, if you have real estate related questions, looking to buy or sell, feel free to give me a call or shoot me a text. Chris Jarzik with MVP Realty. I hope you have an amazing day. Thank you for checking out the video, and I'll see you on the next one.